Feel the beat, the future's near. Mind is fine, lose the fear. Hands up high, let's celebrate. In this groove of fate awaits.
Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future.
That will make us money.
All right, another one. Thankfully, there's some stuff making us some money now.
Yeah, coming off April, we had a little correction in the markets, right?
Yeah.
And that just was April.
Yeah, and that's what we talked about in April, right? And
Yeah.
not to say that there won't be other corrections this year. There might be.
And now we have all-time highs again.
Yeah.
And listen,
NASDAQ hit 17,000 today.
Crazy, right? 40,000 for the Dow.
Yeah.
Which nobody gives a fuck about. Shit.
What's it? Are we allowed to curse on this podcast? We have to mark this explicit now.
Yeah. I don't think we are.
I like that you corrected the F word for just shit. Like it's like, oh, I cursed, but now I have to get a slightly less bad curse.
Funny. Yeah.
But no, it's been a great month. May has been a great month.
Yeah.
In particular, we're going to talk about, we've been talking about tech stocks. We've talked about Nvidia a lot.
Yeah, I mean, let's get into it.
Yeah,
right?
I mean, it's been the darling of investing for the last, let's call it year and a half now.
Yep.
As we go through this AI boom, and we talk a lot about AI, but Nvidia again is the engine behind AI.
Well, yeah, and they had their earnings last week, right? It's funny, Nvidia actually is one of the few tech companies that reports later in the cycle, right? So all the tech companies reported a few weeks back already, and Nvidia last week had some really high expectations.
Yeah.
I mean, as high as they can get, right? And boy, they blew it out.
I mean, it's crazy.
Yeah.
Like I don't even understand these.
Well,
numbers.
let me break some down numbers, right? Revenue was up 270%.
Yeah.
Right? $26 billion. This company did $6 billion in revenues last year.
Yeah.
For that same quarter,
That's
right?
crazy.
Their free cash flow was $15 billion for the quarter. Their margins were 79%. Okay.
Like, is that sustainable though? Like, this is always my fear with Nvidia. Like, can they sustain 80% margins?
I listen. There's a lot of questions that none of us know.
Yeah.
And I think let's just say that in the face of very high expectation, they've been delivering, and they've been delivering
and beating
quarter after quarter, right? And what happened is they find themselves in this new cycle of AI spending.
Yeah.
And I think your question is absolutely right. Like, can this spending continue, right?
Yeah. I don't know the answer, honestly.
Yeah.
I keep saying it.
Yeah.
I keep saying, can they maintain this margin? And I know they have a big lead on everybody else.
Yep.
Right. But, you have AMD kind of trying to do their thing. Amazon's trying to create their own chips, right?
So I'm not worried about that because they specifically addressed that in the earnings call, which is, listen, we have Blackwell. We have all these new chips coming out.
Yeah.
And once you kind of are in the NVIDIA ecosystem, because it's not just a chip, right? It's the software. It's a whole suite of things that work together. Once you're in it, you have to buy more chips from NVIDIA if you want to improve your capabilities, right? I think what I'm seeing, what I'm thinking is, if I'm using ChatGPT for 20 minutes today or an hour a day, what if I need to use it for 4 hours a day or 5 hours or 6 hours?
Yeah.
NVIDIA is definitely the place that will allow me to have those capabilities.
Yeah. I mean, we'll definitely talk. Let's talk, a little bit more about their numbers, and then, I have some questions about, again, how does NVIDIA defend this moat?
Right.
Going forward. But yeah, so you said revenue was up huge. The earnings were up like 400%
just for the data center revenues.
Yeah.
Everything else was up. It's what's happening is it is this whole ramp.
Yeah.
All these big tech companies have to build this AI capabilities.
Yeah.
And the only place to go is really to go to NVIDIA. So they have a runway of a couple of years basically of just demand, right? And it's mostly from Amazon,
Google,
Tesla now.
Yeah.
So a lot of these big tech companies that want to do it. The key is at some point, as you said, can this be sustainable and continue?
Sure.
For right now, I mean, listen, I think Facebook said, they're
you forgot about Facebook.
Yeah,
You forgot
Facebook.
about Meta,
they all have trying to build these massive compute clusters, and Nvidia is the only place to go and do it, right? So
Yeah. So somebody needs to come in and to disrupt this.
Yeah.
But that being said, right, there's always going to be there's always going to be competition in the future, right? Obviously, they're ahead right now. It's a big thing. Again, I always like to use the analogy to like Intel in the 90s. Right, they were the only game in town. Or Cisco.
Yeah, right.
Right. Yeah. The picks and shovels. And
I think Jeff Bezos said it best once. He said, "Your margin is my opportunity."
Yeah,
so
100%.
This is how capitalism works, right?
Yeah,
so
for sure.
someone is going to come in. I think they have a fairly large, headwind or fairly large kind of 5 years of basically ramp here. But some other competitors will come into the space.
Yeah, totally. But right now, so I almost think of it as like, again, another analogy that I have only is like cloud, right? Right. At first, AWS was the only game in town, and you went with AWS, and that was it. And then you had Azure come in.
Yep.
And now you have Google Cloud, and so now you have a few different options. Those businesses are high margin for all of them. So I don't think when I say competition's coming in at some point, that doesn't necessarily mean that Nvidia loses here, right? There's Apple had Android, AWS had Azure and Google Cloud. It's not a zero-sum game. If the premise is that AI spend continues over the next 5 and 10 years,
I think that's the biggest question, right? Like, is AI going to turn out to be this really revolutionary thing that we can do without it? The ChatGPT moment has been a very powerful one, right?
Yeah. The question is, how do they now translate that into money for everybody else?
Correct. Facebook stock was down 10% on earnings because
it was almost 20.
Yeah, 20%, right? It's because they were spending all this money on Nvidia chips, but really have not shown any meaningful, kind of results or improvements on their bottom line, right?
And I think that's across the board, right? The funny part, right? Microsoft obviously owns part of OpenAI, which is ChatGPT.
Best investment ever.
For them, sure. But on the Microsoft side, between Copilot and ChatGPT, they're not seeing that much revenue growth, right now.
But at least they have a way, of monetizing that.
It's a multi-year thing, and I think that's what we're betting on is a multi-year trend for these companies.
Yeah.
But right now, Nvidia is the only company that's actually bringing in money from AI.
Pretty much.
Everybody is spending and they're taking.
Yeah.
They're the gatekeeper.
Yeah, I mean, listen, I think it's going to broaden out. But I think let's kind of back it out. Let's talk a little bit about why we owned Nvidia as a firm, because we have a great story of why that is.
It is a great story.
Yeah, and then obviously we want to talk about, we're financial advisors, right? We want to make sure we talk about diversification and it's why it's important to be a little bit smart when you get lucky like this, right?
Yeah. Absolutely. So I do love the story of Nvidia. There's a handful of stocks that I remember the exact moments that we bought them and why and the premise and all that kind of stuff. With Tesla, it was that we went. We drove the Model S the first time, the computer on wheels, where we kind of saw.
Right.
With Nvidia, the moment you and I talked about it before, but that moment, that sort of seminal moment, was CES, the keynote of the Consumer Electronics Show in Vegas in 2016. I remember very vividly watching this thing going, oh my God, this is going to be the most boring thing ever. I'm going to hear some chip nerds talk about chips and I was like, oh wait, it's 2.5 hours. It was a 2.5 hour presentation. I'm like, this is going to to be awful, but I'm going to watch it anyway.
It doesn't do long things.
It's so hard for me. It's hard. Yeah. And I couldn't watch it 1.5 or 2 times speed like I normally do. Tim always makes fun of me because I listen to everything at 1.5 to 2x speed. And then I started listening to Jensen Huang talk about this guy.
CEO of NVIDIA.
Up until this point, NVIDIA was a company that made graphics chips for video games. That was it. They were a sort of niche
Yeah.
player.
Very niche. They made, they made
Yeah.
Call of Duty better.
Correct. Yeah.
Like, literally.
Yeah. And so like, and they're an older company, right? They go, in the 90s.
Yeah.
So, Jensen Huang starts to talk about, driverless cars. He starts to
Yeah.
talk about, machine learning.
Mm-hmm.
And he starts to talk about video games, data centers.
Yeah.
And to me, what was the biggest thing where he started to talk about chips being able to tell other chips what to do, to
Yep.
program other chips.
Yeah.
And I even kind of joked at the moment. I go, if you've ever seen Terminator, I was like, crap, if this is the Skynet moment where Terminator gets built,
Right.
like John Connor has to come back right now
Yeah.
and take Jensen Huang out.
Yeah.
Because this is that moment where AI is born,
Right.
the true AI. And, obviously AI has been a thing before these chips and all that. But I do remember vividly coming back in the next day, talking to you, talking to Ross, and saying like, dude, we gotta put more money in this
Right.
company. Like, this
Right.
is the moment.
Yeah.
And like, they're in all the businesses that we want to be in. They're in cars, they're in data centers, they're in AI, machine,
Right.
like all this stuff. And we bought it. That was in 2016. Was
Right.
some of our first purchases. We made more obviously along the way, but. Obviously, it turned out enormously for us. What everybody forgets, though, much like in 2018 when Tesla was down 50% before
Right.
it made that huge
Nvidia
spike.
was down
Nvidia was down 65%
in 2020.
2020.
Yeah.
Or 2022.
Yeah. So yeah. So it was not a sure bet per se.
Correct.
Yeah, nothing is in investing anymore.
Correct.
Yeah.
And while we knew this idea should play out, or we thought this idea, we had a high expectation it would, we never thought it would happen at this speed.
No.
You know what I mean?
Listen, to put this in perspective, Nvidia is worth more the whole German economy.
Crazy.
Like the whole German I'm talking like this happened in a very fast period of time,
Yeah.
right? So
Yeah.
I think there is definitely a lot of hype,
Yeah.
kind of around what they
Absolutely.
can do. And then, yeah, the numbers are really fantastic. I've never seen anything this good.
I haven't seen anything like this.
Yeah, I don't
before.
think I've never seen anything like this. And we were involved in with Tesla when he did it 10x kind of in a couple years.
But that was a lot of that was based on hype also.
Yeah,
in
exactly.
addition, it was not like the numbers, like
Yeah.
these kinds of earnings growth, I've never seen anything like
correct
it.
at this level.
Yeah.
100%.
Yeah.
Yeah.
Not going from, making $1 million to making $10 million.
And this is kind of how the stock market works, right? It's really about expectations changing, right? So when you expected a company like Tesla to go bankrupt and then they actually deliver, then the stock will do well. Same with Nvidia, right? Where it's like you expect to do X amount of revenue and they do 10 times that. Then it's just a different story, right?
For sure.
And then obviously excitement, the power of momentum, right?
Yeah,
like,
absolutely.
like nobody knew what Nvidia was 2 years ago unless you were in the investment business.
Yeah.
Now it's a household name. Jim Cramer called his dog Nvidia.
Yeah, that was a big Tim Kramer was big on that because I get calls from my friends, random people that I've talked to over the past, and they're like, dude, Nvidia is crazy. Like, I can't believe this stock.
Yeah. And most people have no clue what they do.
No. I mean, they know AI. Well, I think at this point, they all know what they do.
Yeah.
Right? They're like, Nvidia makes AI chips. That's the gist of it, right?
Yeah.
Like, obviously, there's much more nuance to it. But that's what people are thinking and saying. Is like, this is the internet. This is the internet as it was. Now it's the AI internet.
Yeah.
So I think it's important, like you said, though, right? With all this, we can pat ourselves on the back all day long and say how great we are for, making this, bet on Nvidia.
Listen, we talked about heuristics and biases, right?
Yeah.
I get there is some skill in what we do.
Sure.
But this is also luck.
For sure.
You know what
Everything
I mean?
is.
Like, you have
Everything's
to
luck and skill.
Yeah.
Like, if you watch I'm a big sports guy. I'm a big NBA guy. If you watch the basketball games over the last week or so, like, one shot changing, like literally, like the Indiana Pacers are playing the Boston Celtics in the conference finals for 3 games in a row.
Yeah.
They should have won
The game.
Now, part of that is they blew it a couple of times.
Yeah.
But it's, one bad bounce, one missed shot changes the game.
100%.
right?
Yeah.
And everything else they did right.
Yeah.
And so we could have easily taken one bad bounce. In
Yeah.
our case, the bounce went our way.
Yeah.
Like it was an educated guess. It was an educated bet.
Yeah.
We liked everything we heard, right? We talk about a few things when we invest in stocks. One is like, what's the fundamentals, right? What's the underlying
Yeah.
investment thesis of earnings growth and all
Right.
that kind of stuff. Then there's technical, right? That's the momentum, the
Right.
charts. What is the stock? What
And
is the feeling?
The most important is the theme.
The theme, and then the final part, which we always talk about, is who's leading the charge.
Right.
It's one of the reasons we've become bearish on Tesla
Right.
and much more bullish on Nvidia.
Right.
Is how the leadership is performing.
Correct.
And Jensen Huang has shown time and time again that not only does he get it, like his thinking is a decade ahead of everybody else's.
He's a grown up. Yeah.
He's a grown up, except for the leather jacket.
Yeah.
I tell wanted to wear leather
I
jackets
really
today.
did. It's hot in this room, guys.
You would have been sweating during
Yeah.
this. So I think it's important to understand, right? Diversification. We still need to do this. If you have the stock, no one ever went broke taking a profit.
Yeah, listen, I think let's talk about it because this is, we're investors, but also we're financial advisors,
Yep.
and we help people kind of shepherd their wealth and,
Yeah.
and really be kind of good stewards of what
Yeah.
decision they need to make, right? And when you have a stock or a company that you bought that is up 10x plus,
Yeah.
right? It's just important that you think, listen, maybe there is a bit of a bubble kind of mentality going on,
Sure.
and taking profits makes
Yeah.
a lot of sense, right?
Yeah.
Diversification is one of the most important things
Absolutely.
that you can think of when you manage your money.
Yeah. And don't be sad. I play this game with myself sometimes. I was talking to you about this. Like, I sold Nvidia shares along the way for
Sure.
myself.
Yeah.
I could play the game all day long. If I held these shares, they would be worth X.
Right.
But you can't do that. Like if you sell 10% of your position, 20% of your position,
Yeah.
because it's gone up so much, are you really going to be sad if it doubles again?
Yeah.
You know what I mean?
And also hindsight's always 20/20,
For
right?
sure.
Because what happens is your mind will play these games with
Yeah.
you because stock goes up, but just as much as it could have gone up, it also could have gone down, right?
And how crappy does it feel? And we spent a lot of time with
Right.
this in 2022,
Yeah.
where people who held stocks, and I'm not saying Nvidia is anything like these meme stocks or
Right.
anything like these, high value tech stocks, because
Right.
they have real earnings, but how many people worked at companies that we
Yep.
know, that we worked with, that wouldn't sell their shares, stocks up 5, 10x.
I've
and
seen
they're not
that
willing to sell.
story
Yeah.
play out way too
Yeah.
many times. Yelp
Yeah.
comes to mind,
I mean, there was like
Yeah.
100 of them in 2022, right?
100%. You know what I mean? So I think our biggest job is trying to really tell our clients how to really kind of take that emotional part
Correct.
of that
Correct.
investing and really
Yeah.
gonna do what's prudent for you, because
Correct.
maybe you leave some money on the table, but ultimately this is how you secure wealth for the long term.
Yeah, absolutely. And there's nothing more upsetting than watching a stock go
Yep.
up 10x and then down 50% from there.
100%.
Because, despite what people might think, if you lose 50% of
Yeah.
the stock, it then has to go up 100% for you to make it back.
A shameless plug. I will encourage people to go back and listen to our biases podcast, right?
Yeah.
Like, these are all the things that we deal with, and we have to remind ourselves that we're all very susceptible to them.
Yeah. And so you mentioned the word bubble
Yeah.
a couple times now.
Yeah.
And I think it's important to talk about bubbles in
Yeah.
general. Are we in a bubble? Is AI a
Ayal
bubble?
is our historian in chief at Gerber Kawasaki. So Ayal has put in some notes here to talk about the bubbles, because I think it's important. It really is important
Yeah.
that we remind ourselves, right?
I do think the topic of whether we're in a bubble or not, I think, is a longer conversation.
Yeah.
But what's important is let's talk about some of the bubbles like throughout history, like right.
Love it.
You don't. A lot of times you don't know you're in a bubble,
Right.
until it's too late.
It's even actually more than that. You actually justify it.
Yeah, 100%,
you-
right? Because you're like, oh, well, if I don't do this,
Yeah.
people are making money. This is why this is happening. So let's go back real quick. I think historically, right, outside of our modern time, the historic best example of the bubble is the tulip bubble,
Everyone
tulip
knows that.
mania,
Yeah.
right? The Dutch tulip mania in the 17th century, whereby, these tulips were, right, they were rare, they were beautiful, colorful.
Right.
They didn't have them in a lot of places. And so they started to, gain value, and people were excited about it. And like any bubble, right? You start to justify, well, there's not a lot of these, and they're very pretty.
The greater fool theory, dude. I'm going to buy it.
All right,
I'm
go
going
ahead,
to
let's
buy
say, yeah. So what's the greater fool theory?
The greater fool theory is I'm going to always find a greater fool who's going to buy it for more than I bought it for, right?
Correct.
So it's kind of
like people are willing to spend more and more. I'll buy it. I'll unload it.
Yeah.
And eventually somebody gets left holding the bag.
Totally, right?
And then
hopefully you're not the fool, right?
Right. Well, and then it ends up affecting everyone.
Right.
That's the problem after that.
That's true.
Right. So you have the speculation, and I was reading that a tulip in some places was going for more than the salary of a highly skilled craftsman, of a yearly salary of a highly skilled craftsman.
Okay.
Right. So that gives you an idea, like a flower.
Yeah.
And that, right? So that's the big one that we all know about.
Right.
I think the ones historically that people might not think about a lot is, in the 1800s and 1870s, we had the great speculation of the railroads and the industrialization as the overexpansion after the Civil War.
Right.
Like everyone's like, all right, we're going to raise a bunch of money. We're going to build railroads everywhere.
I think so. So the tulip was like really just
nonsense,
bunch of bullshit. But every other bubble, like the railroad, that was
they have a real premise behind them. Like why wouldn't you have more railroads to expand?
Correct.
Right. The westward expansion in the U.S. was huge. Right. Then you had the gold rush.
Yeah, exactly.
Right? You're in the midst of the Industrial Revolution. All these new technologies are coming. It's funny because I always use the railroads as my example to say, like, there used to be a time where railroads were the biggest innovation.
The biggest innovation, right?
And so innovation changes, and obviously, like with anything, you get. Everybody's like, oh, well, now I got to get in on this. I should build a railroad. Let me raise a bunch of money. And, we all know about the Great Depression in the 1920s, but in the 1870s, we had this panic of 1873. We used to call them panics before they became depressions.
Right.
And it decimated the U.S. economy, like most bubbles did, because all of these things were basically worthless. All of this over speculation and over hype.
Yeah.
And then, of course, we have the one that most people know, which is probably the most famous bubble of all time, which is, the 1920s, the stock market crash, Black Monday.
Right.
And I think the market loses like 80% of its value because the overhype.
But also he grew, 30% a year for like 7-8 years?
Yeah, but once again, pure hype, pure speculation.
But also there was the car, like there is a lot of the industrialization happening.
Sure.
So...
There was a lot of, again, like you said, right? With anything, there's always a premise behind why this should be continuing on eternally, essentially.
Yeah, and this is kind of like, I think the lesson is like the premise justifies the euphoria or the exuberance, but they don't match themselves one to one, right?
Yeah.
So one has to get ahead of the other,
right?
You know what I mean? And that's kind of how the system works. It's capitalism, right?
Yeah, for sure. So the Great Depression, right? We get decimated. We have the worst, unemployment in the history. Right. We have no, and it's important to note that before all this stuff, we had no checks and balances for over speculation.
Yeah. Every time actually this happened,
it gets a little better.
Right. We have some regulatory reforms,
Right. So in the 30s, that's when we had the advent of the SEC. We had
the 1934,
the
Securities Act, which is kind of really regulates all.
Right. And then the Federal Reserve, like there was no Federal Reserve. The funny thing is that they were raising rates into a downer economy. Like they just like had no idea compared to what we know today. Yeah. And obviously, again, then we had World War, and it was just a horrible time. Yeah. And again, all predicated on over speculation. And then in our lifetimes, right, we have, I think, the big ones that we know. I mean.
Yeah, let's talk about those, because those are like, more recent, right? Like people can relate to that, right?
For sure. So. Right, the big ones that we know are the dot-com bubble, which I think is kind of the best analogy to where we are today.
Sure, yeah.
And we had obviously the Great Recession.
The dot-com, the premise, the internet, right?
Yeah,
like
the internet.
Digital economy.
It will transform anything, which, by the way, was 100% true.
It happened, actually.
It definitely transformed everything.
But I think 90% of the companies that were created then are
We're
gone
gone.
today.
Yeah.
You know
Yeah.
what I mean? Even like the ones that stayed, like Cisco and Amazon,
Yeah.
were down 90% plus.
Amazon was down 90% at one point. Like
Right.
if you think about that, and yeah, again, like you said, hindsight is 2020,
Right,
right?
yeah.
You're like, oh, why didn't I buy Amazon back then? But you didn't know if Amazon was going to be in business next
Totally,
year,
right? Exactly.
And the quote, good companies, Microsoft, Cisco, Intel,
Yeah.
these companies were down 50, 60%.
Well, Cisco, I think it's really kind of a good analogy to Nvidia because
Yeah.
they were kind of the pigs and shovels back then.
Yeah.
They made routers and whatever they call them.
Yeah.
And
Switches.
switches, right?
Yeah.
So, and people thought that was the safe play
Yeah,
for
yeah.
the internet. Still was down 90%.
And again, Microsoft too.
Yeah.
And not only was it down, but most in the NASDAQ overall, and including Microsoft, which was like the big gun, right? Didn't make money for 15 plus years.
Right.
Like you literally, if you bought at the top
Yeah.
and you held and you did nothing else, you didn't like add money.
Should have bought Google.
You should have bought Google. You should have bought Amazon. You should have bought Apple. Like we can go through a list of stuff you should have bought.
Yeah.
But those stocks were down 50 plus percent.
But I think that's the point, right? Like there is going to be different winners
For sure.
If there is a true change, true economic value that's been
Yeah.
created, and I do think like the internet has done that. Obviously, we
Yeah.
know that now. But AI also will do that too, I think.
Yeah.
There is going to be a lot of winners from this, right?
There's going to be losers too.
There's going to be a lot of losers, a lot of
Yeah.
winners,
Yeah.
and this is just the
Yeah.
beginning of it,
Yeah,
right?
exactly.
So let's talk about the I think the one that I know I started in this business in 2006.
Yeah.
The GFC, the Great Financial Crisis,
Yep.
happened in 2008, right?
Yeah.
And that was one of the biggest bubbles ever.
Speculation on real estate.
Right.
Derivatives. We're gonna get back. We're gonna go big short on this thing and
Yeah.
talk about derivatives and
Yeah.
the big one there was like there was obviously a bubble in real estate,
Yeah.
but behind it was nothing. It was sort of like a house of cards.
Yeah.
And then
There was a lot of manipulation.
Yeah.
There was a lot of ninja loans.
the
and-
ninja loans, no income, no job.
yeah, exactly.
And that was a real thing. They'll be
Yeah.
like, you made $40,000 a year, and they'll be like 200,000. Like man, nobody checked.
So fueled by massive
Right.
speculation on asset prices going up for no reason, really. You know.
Yeah. Yeah.
Uh,
Well, the reason was that everybody was buying houses constantly. There was a
Right.
limited supply of housing, and people were buying
Rates
more
were
houses.
low.
Rates were lower, and not low compared to what we remember.
We're
from-
lower for sure. Yeah.
But if you have people, if you're just giving away houses, pretending that people can afford to pay them,
At some
and
point.
giving them low, and it wasn't really the low rates, right? It was these balloon
The
payments,
weird-
right?
the weird loans,
They would
yeah.
readjust, and people had no idea. They would
Right.
adjust, and obviously, people should take responsibility too,
Right.
Right, but you have a mortgage, and it was costing you $3,000 a month,
Right.
And then 2 years in, that loan jumped to $8,000, and you're like, what?
Can't afford this.
Yeah, and so everything
Yeah.
collapses like a house of
Right.
cards. Then you have the
And I think that's the other thing. Like it spreads,
Yeah,
right? Like
for
it's
sure.
never contained because the economy is like it's
Yeah.
it's an ecosystem. It's
Yeah.
a bunch of different things working
For sure.
together, right? So if one part really collapses, it's gonna have some different impacts on
for
different
sure.
areas, right?
And the stock market generally moves first. It's kind of the telltale sign of things that are going wrong,
right.
as it tries to guess kind of what's happening. So
Yeah.
you'll see the market's always going to fall
Right.
first as it sees the cracks. It starts to see the cracks
Sure.
form.
Yep.
And obviously, with the great financial crisis,
Yeah.
the sort of like going the sort of collapse of Bear Stearns and all
Yeah.
this was sort of that seminal moment. Lehman Brothers,
Right.
right?
Yeah,
And-
you didn't expect these like institutions that have been around for I don't know hundreds of years
Yeah.
to just like
Right.
literally collapse
Yeah.
overnight.
Yeah, and the economy actually didn't bottom until the end of 2009 or the beginning of 2010.
March of 20 the market
The market bottomed in March of 2009, but the
But the
economy
economy
didn't
is
bottom until the end of the year.
100%.
Right? So
Took
the
a
market
while.
is always 6 to 9 months kind of ahead.
Looking
it's
ahead, yeah.
actually kind of interesting how good it is at predicting the future,
Yeah, yeah.
but you just never know where it stops. Right?
100%.
It moves
Yeah.
too much in one
Yep.
way or the other. And then that's the big one, obviously. And then more recently, where people will probably remember is right in 2022 or
Yeah.
2021, we had the it's
meme
kind of
stock.
the meme stock / cryptocurrency / tech
This
bubble.
is like the greatest fool theory, I think.
Dude, honestly, like I remember between the meme stocks and the NFTs.
Oh yeah.
Like the NFTs to me,
What is it?
What were the names of the board apes?
The board apes, baby.
and I remember somebody in our office who will remain nameless was telling me about this stuff, and I'm like, wait, what does it do? What?
$1 million for an
I don't. You're buying a
digital
picture of an ape, and it's. And I remember somebody saying, "Well, it's absolutely going to go up 100%. There's no question about that." And I go, "There's no question." Maybe you should be asking some questions. So again, another idea of just rampant speculation as things get out of control.
It's about human.
Yeah.
You know what I mean. Greed is real.
Yeah.
People, you see a lot of your friends making these moves.
Yeah.
You think you're smart. You think you know what you're doing too.
Yeah.
And then the market kind of, really justifies it for you because you make money.
Yeah. Until a point.
Until a point, right? You know what I mean?
And when that switch flips,
Yeah.
the market works against you, and there's
it happens fast.
There is a saying in investing is the market goes up in an escalator and it comes down in an elevator.
Totally. Yeah.
Right?
Yeah.
So it will feel fast and hard, and it's it's very painful, and this is why we try to warn people. Nvidia notwithstanding here, it's a great company, great earnings. The numbers are insane.
Yep.
Right.
It's not a meme stock. That's
not a meme stock for sure.
Yeah.
That being said, like we've been talking about, it's important to exercise prudence, to exercise caution. Don't have it be 50% of your money.
And the other thing, I think, hopefully, the message from this podcast session, why we wanted to do this, is that we think of ourselves as professionals. We think of ourselves as people who know what's up.
Yeah.
And still, we don't know. We know that we don't know when this will end.
Yeah.
Right. So,
and it's hard for us to make these calls.
Nobody knows. And I think you go back to some of the previous bubbles, some people kind of figured out when and made money, but most people haven't.
No.
You know
There's
what I mean?
3 people who figured it out.
And there's books written by those guys and movies and so forth, right?
But what's not written is how many times they didn't get the other things right.
100%, right? So everybody, broken clock can be right twice a day, right?
Yeah,
so
I can think of some guys who are broken clock.
100%.
Had movies made about them.
100%, right? So John Paulson, right? Like
Michael Burry, the Big Short guy.
Yeah, those
right?
guys made like amazing trades one time and never made money since.
Michael Burry has not made money in the market. He's been short. He's been short Nvidia, short Tesla, short like I was like, dude, like at some point, just stop it.
Yeah, that's exactly it. So I understand when you're actually when you're lucky and you kind of caught a trend, and it's okay to catch a trend, right? Like it's okay to invest something. You know what I mean? And we're not here to tell people you should never invest in stocks because you're never going to figure it out, because it's not real. People do want to invest in these things and these trends and want to be involved in these things, but the amount of hype sometimes has to be put into.
I think it's important to talk about the hype. We talked about bubbles, and I think I want to kind of bring it back to like, are we in a bubble right now in AI? And it's always a hard, right? Things move faster today than they did even in the 90s, right?
I can make either argument.
You can make either argument for sure,
so that's
right? So make the argument for us not being in a bubble.
We have $1 trillion in data centers, right, that need to be upgraded, right? Because AI's productivity gains are just so crazy that every company out there, if they don't have these capabilities built within their systems, they are not going to be competitive. So every company, and now we just started with the big tech companies, but every other company from healthcare to consumer discretionary, whatever, has to have these AI capabilities. So they have to invest a ton of money to own these LLMs and chat GPTs and things like that, right? That is the best case scenario.
Sure. The bear case for me is we bought $50 billion worth of AI chips last year, and $50 billion this year, and probably another $50 billion or $100 billion next year, and we've had a few $1 billion in earnings created.
Yeah, it's not. You got to catch up. You got to make money at some point.
So, like I said earlier, Nvidia is definitely benefiting from this. The question becomes, right, and like you said, we know we don't know, right? We believe that AI is a trend that's here for multiple years. How does that actually translate into market movements in the future is hard to say, because it's all contingent on this question mark, which is, how much productivity gain
Sure.
is this company going to get
Yeah.
over what period of time, and when does that crossover happen,
Sure.
right?
Yeah.
Where I'm like, I spent all this money and now I finally got the real benefit
Sure.
of it. Is it 3 years from now? Is it 5 years from now? Is it 10 years from now?
100%. And that's
Right?
really the biggest question, right?
Yeah.
Like, if we know, we've seen the productivity gains happen now,
Yeah.
but we don't know how are that going to translate into the earnings of GM,
Right.
You know what
Correct.
I mean,
Yeah.
or whoever company that invests in this stuff.
Absolutely.
And at some point, your board of directors is going to start asking, does it make sense
Yeah.
to be investing in these things?
Yeah.
Right.
Yeah, and I think in the shorter term, it is important to note, right, that multiples of these tech companies, not named Nvidia,
Yeah.
and these are the big ones like Microsoft and Google and these companies. We've been leaving Apple out of this a lot,
Yeah.
because Apple's kind of a black box sometimes as to what they're doing.
Yeah.
We believe they have their own AI strategy, but remains to be seen. But these big names, right? They're not seeing the gains yet. So meanwhile, the price to earnings multiple, the valuation of these companies is going up on the hopes that this is going to happen.
Hopes, right?
Right.
Like
Yeah.
that is like everything is priced to perfection. And this is
Yeah.
why Nvidia's earnings last week were so important, because everybody was expecting them to do well. Had they just had one blemish,
Or even just done slightly better than people expected.
Yeah, that's exactly it.
We probably would have seen a correction in the stock or something.
Yeah.
So that's the big question mark for the next. And if we're in a bubble, we don't know until the bubble pops. Frankly,
Right.
Do the things translate into future earnings? It remains to be seen. I think the important thing is that to embrace that we might be in a bubble, or we might get into a bubble territory at some point. It happens and it's inevitable.
Yeah.
So it's important to be prudent.
Yeah, and it's actually, bubbles are actually good. It's part of the process, right? So what happens is people get excited about something. A lot of money comes in. A lot of investments happens in that space.
Yeah.
Some great stuff gets built.
Yeah.
And 90% of it doesn't work.
And the
10%.
But that's capitalism, right? In and of itself, right? So, we were talking about historically how bubbles, can collapse an economy. We have a little bit more safeguards in place now to help, like they're bumpers, kind of, you know what I mean? Like, while we'll still have 50% downturns or 30% downturns, like hopefully the way, the Federal Reserve can lower rates,
Right.
They can, during COVID, they even said, we'll buy assets, we'll buy stocks, we'll buy bonds. You know what I mean? So we have tools that we didn't have in our tool belt maybe 100 years ago.
Yeah. But also it's important to see right now, there is not a lot of speculation, at least in the big tech companies, right? These companies have a lot of financial resources, and they're using them because they really think that this is going to be a game changer for their businesses, right? And there is also a monetization system that's going to work out, right? If Amazon buys a bunch of Nvidia chips, they know they can rent those chips to other companies to make money. So there is definitely kind of a way of monetizing this whole process, right? So that's why I feel a little bit better about it than a bunch of meme stocks or a bunch of
100%, right? It's definitely better than that stuff. But at some point, we're going to get to, and we got a little bit to this point earlier in this year where some of these like high flying tech names that you don't know, not the Apples and the Googles and the Microsofts. You had some of these Cloudflares and some of these companies that everyone says AI is going to be this and that, and all, and it's great and it might be. But when they miss their numbers, they're getting hit hard,
100%,
right? And that's good. That means there's less speculation than bubble territory.
100%. Yep.
Over the next few years, are we going to get more into this territory? Possibly.
And this is kind of, I think there should be some humility, because there's no way anybody on Wall Street or anybody on Earth can tell me what Nvidia's number is going to be in 2 years.
No, we have no idea.
You just have no idea.
Or a lot of the other companies who supposedly are going to get the productivity boost.
That's exactly it.
You know what I mean? It's just really hard to say it. And I do, so I think to kind of, wrap this up here, I think it's important to note that AI is a trend, in our opinion, that's going to be a force for the next decade.
Yeah.
Right? And even after the dot-com bubble burst, the internet didn't go away.
Yeah.
You know what I mean?
but also like the .com kind of craze started in 1994.
Right.
You had 6 or 7
Correct.
years of 30% plus.
Incredible.
Yeah, you know what I
Right,
mean? And
yeah.
Amazon was created then, a ton of amazing companies.
It creates a lot of amazing companies.
Right, exactly. And
Yeah.
then, as you said, once the internet kind of, did not come in as promised,
Yeah.
the Internet 2.0, that's when the Googles and the Netflixes and the
Yeah.
Facebooks were created. And those were massive game changers for the
Yeah.
whole economy, right?
sure.
So I think it's just a matter of being patient and seeing that play out.
Yeah, like in 1995 when Windows 95 came out, do you think anybody had an idea that Uber was going to be created?
No.
because of it. Like, so we don't even know.
Yeah.
We can't even comprehend at this point where we'll be in 10 years.
Sure.
So,
I think that's the exciting part for me.
yeah, for sure.
Yeah.
Same.
Yeah.
Good or bad.
Yeah.
Because obviously AI comes with some bad stuff too.
All right.
But I do think.
Are you
that,
thinking Terminator?
I'm not thinking Terminator. I'm not one of those
You're
guys.
thinking about her.
I'm thinking
Scarlett
more.
Johansson?
No. I'm more. I mean, that would be a good thing. If I could have a digital Scarlett Johansson, would be great.
AI wants to have an AI girlfriend. There you go.
No, I'm thinking more. Misinformation and disinformation. To me,
Yeah,
that's the big downside for me in
100%.
AI.
Yeah.
It's already so bad, and the internet has already created
Yeah.
so many voices for people who don't deserve them.
Sure. It's weaponizing, basically.
Yeah, and that'll be true in AI. AI will exacerbate that.
Yeah.
There'll be more access to great
It's
information.
unfortunately technology, right? Like you
It's
just forget
everything.
about- yeah.
Whether it was learning to the written word or the internet, social media, and now AI. Like every time we get access to a medium that allows us to transmit information over a vast distance, there's an equal opportunity for the jerks to do the opposite.
Totally, yeah.
Right. And so this is just, it is what it is. I don't personally fear that we're going to have Terminators in the next 100 years at least.
Right.
I think we're okay on that front. But who knows? Who knows where we're going to be? But I think it's super exciting as a trend. I use ChatGPT multiple times a day now.
Oh yeah, it's been an amazing.
I teach my son stuff through ChatGPT. We'll be driving, and I'll be like, "Well, let's learn something. What do you want to learn?" We spent 20 minutes learning about dark energy in the universe.
Yeah, there you go. That's awesome.
So, and just talking to my phone.
Yeah.
It's kind of crazy. So if you think about, again, are we going to have humanoid robots in 10 years doing our tasks for us?
Yeah.
Like these are real, like stuff that 20 years ago seemed like science fiction.
It seems a lot closer.
Yeah, for sure.
So hopefully that kind of helps inform why we do the things that we do.
Yeah.
Also, impart some humility from our part.
Sure.
We were lucky. We were smart, but also lucky, and we
Yeah.
understand. We take that to heart and try to make the right decisions. So if you have questions, talk to us. Talk to your advisors. Let's be smart and get excited about what's next.
Sounds good.
All right.
All right. See ya.
See ya.